in terms of each segment, of course, the share varies, like you rightly mentioned as well. I wouldn't like to comment too much about, the competition or what they're doing, but, from our standpoint, and that's what the industry data tells us as well, is that in the super premium or the luxury segment rather, which is north of 2,000, we are very well poised and are market leaders comfortably in that segment. We had the first mover advantage. We saw that the trend is moving towards premiumization about 6 to 7 years ago, and therefore have continued to innovate and add new brands in that segment. So that remains a major focus for us, and we look to continue to invest in that category. Of course, the premium and the super premium ranges are, of course, inherently, if you look at the wine history in India, have been the largest contributors as segments. And we are well poised to grow in each of those segments as well. With respect to margins, of course, the premium, the super premium, and the luxury brands contribute more to our EBITDA naturally. And I think, like I mentioned in the last question as well, that we are looking for a sustained EBITDA expansion in the next 2-3 years across, the premium, super premium, and the luxury segments, with an improvement at a gross margin level as well.
Okay, sir. And so how does your quality compare to some other international brands at a similar price range?
Hi, this is Gaurav here. We would like to think that, the quality we are delivering and offering at the price point we are offering is far superior to some of the imported wines that, by the time they come to India and you add the duties and the tariffs and everything to it, I think we are punching way above our weight in terms of price. But wine is so unique. Everyone has to try and form their own opinion, and kind of what you like is what you like. But in our view, our wines certainly sit at a much higher level of quality when it comes to some of these imported wines landing on India shores, even up to 3,000-4,000 rupees MRP.
Okay, sir. And sir, can you please explain?
May I request you to join back the queue, please, as we have other questions in the queue?
Sure. Thank you.
We have our next text question from QI Advisors, Rakshak Jain. The question is, what is the future growth and how are we different from other companies? Thank you.
See, in terms of future growth, wine industry, as per all industry data available to us, is expected to grow at about 15%. We've grown about 25% CAGR over last 3 years. We are doing a bunch of, capex now to get future ready, and to further strengthen our moat. So we do expect to grow, steadily over next few years, as we have done in the past few years. I think that is very reasonable to expect. We won't comment so much on the margins, etc. at this stage.
Thank you. We have a text question from Rachna Kukreja. Please help me understand a little bit about our export markets. What kind of traction we are observing and what plans we have for the export market to navigate competitive intensity from other international brands?
Sure. So, exports at the moment is a very small contributor to our overall top line. It's less than 3% as an overall number. And I think our major focus for the last, I would say probably 5 financial years, has been largely to build the domestic market in India. And, we've been successful in doing so. And our major focus, even for the next couple of years, is primarily going to be in the domestic market itself, since, there's still a lot of penetration to do just here itself. But in saying that doesn't mean that our focus is not on exports. We are exporting to roughly 10 countries, out of which 6 are, very, very consistent in their demand as well. And, we're looking to grow that base every year. And we will expect, a 20% odd jump in our exports this year for sure over the previous year. So it's a small base, but it's something that's expanding year on year for us. And we're going to be looking to, keep investing in this category as well and keep participating in some of the major global expos as well to grow our brands.
We have a follow-up text question from Rachna Kukreja. On one side of the spectrum for wines is a company like Sula, which continues to have a strong brand recognition. On the other end of the spectrum is grower Zampa, which lacks operational efficiency. Now, Fratelli is somebody which will be making large brand development investments and also is focused to generate consistent profits even during a weak demand season. So what are your plans to balance or navigate this?
See, again, we wouldn't want to comment on our competition. We can only speak for ourselves. We are very, very focused on building a business which is profitable on a sustainable basis, and that is where our investments will be focused on. We are very focused on building strong brands. We are a young wine business. We only got into the business 15 years ago, and we have come a long way. It's a validation that our actions have yielded results. So we will just keep doing more of the same.
Thank you. We'll take our next question from the line of Kavita from Archer Advisor. Please go ahead.
Hello. Am I audible?
Yes, please go ahead.
Yeah, thank you. Sir, Kavita here. Just two questions. One is, what is the typical S&D spend you do as percentage to revenue on your wine business?
We are, ma'am, at around 30%.
That is 30, right?
Yes.
And this is, how has been the trend, like in the last 3-4 years, and what you think that this is likely to stay here, and or otherwise, you now with scaling the business, this should come down as percentage to sales?
I'm going to ask my colleague Hemant, who heads strategy and analytics, to.
Hi, Kavita. Thanks for the question. Basically, if the trend is basically in our financials, basically we are at below 30% in the S&D trends. And basically, if you see from last 3-4 financial years, we are between 28 to 30, between 30%.
And any outlook for the future, sir?
We continue to do efforts regarding the reduction of S&D spends, and we'll follow the same, and we'll do different strategy to reduce our S&D expenses.
Thank you. That's helpful. This last one question is, which are the top 3 brands, sir, and what is the contribution of these brands to the overall revenue?
So, just to understand the question again, I think you asked about the top contributing brands.
Sorry, top?
Did you ask
I'm
about
asking
the
top 3 brands.
So our top 3 brands in our portfolio would be the 2 Reds, which is firstly Reds, as you probably would know, is the highest contributing segment in our wine business and in the wine industry as well. And therefore, we have 2 very, very strong brands in the red wine segment, one being the Cabernet Sauvignon and the other being Cabernet Franc Shiraz. Both contribute roughly 8-8.5% to our overall business. And then we have a bunch of other brands which are also contributing roughly, 5 to 6%. One being, for example, our sparkling brand Noi, which is approximately a number 3, which is also contributing about 5.5% or 6% for us. So the whole thing about our portfolio is that we have a lot of hero brands which are contributing between 5 to 7% of our top line, and that consists of roughly 7 to 8 major brands.
Okay, that's helpful, and congratulations for your being listed on the exchanges now. Thank you.
Thank you. Appreciate that.
Thank you. We'll take the next text question from Rajesh Swaminathan, an investor. Hi, how are we managing crop failure risk arising due to natural calamities?
Hi. So, see, natural calamities, when you are in a business which is dependent on agriculture, some of those risks we are exposed to them. Something we have done recently, and we will continue to do more of, is that we have recently taken a new parcel of 150 acres of land under active farming, which is approximately 200 kilometers away from our winery. Now, what that does is that it slightly de-risks us from a climate risk perspective. So those are the initiatives that one can deploy to reduce any risk which is nature related.
Thank you, sir. Ladies and gentlemen, to ask a question, if you're connected on the webcast link, please click on the live question tab on your screen. You may also post your text questions. Participants connected through audio call may please press star and 1 to ask a question. We have a text question from Darshil Zaveri from Crown Capital. Why are margins lower than our peer? What kind of EBITDA margin guidance we have for FY25? What is the revenue guidance for next 3 years?
So, on the margins I already commented, and I think we will be consistent with that view, is that our current base is growing. I think we're geared for that progress for the next 2-3 financial years, and I wouldn't want to comment too much on the EBITDA margins or the future outlook of that. Like I said, it should be an improving trend as it has been for the 3 preceding financial years already. And on a revenue level, we've given a guidance already of north of 15%, which of course, is for the following reasons. The main aspect is that we are going to be doing a major capacity expansion, as I mentioned earlier as well, which is going to give us a 25% increase in our overall installed capacity over the previous financial year. That will obviously help us supplement our current volumes. We are also creating a large civil framework, which of course for the next few financial years, as and when we need to add capacity, we will obviously have that ready as well.
Thank you. We have a text question from Aisha Jain. Which are the top 5 states in terms of sales? How much do they contribute as percentage of sales in FY24? What is your portfolio mix split between luxury, premium, economy split in FY24? Above what price point does the company classify as premium?
Sure. So I'll answer all of them one by one. So firstly, I think you asked about what are our top markets. I already spoke about what are our top regions. Our top markets, which we identify are our big 6 or big 7, and they would be Maharashtra, Karnataka, Delhi, Telangana, West Bengal, and Goa, I think would be our top 6 roughly. And in terms of our contribution through segments, roughly, like I said earlier as well, 70% plus has been coming from our premium and luxury segments now for the last couple of years. We're happy with this product mix. We in fact want to maintain this product mix in the years to come because, as the middle class is rising in the country and they are getting more and more familiar with the wines, the value consumption of wines will also go up. In terms of our own classification, like I said, 600 above is what we classify as premium in our portfolio. I hope that answers your question.
Thank you. We'll take our next question from the line of Tushar Vasuja from Yogya Capital. Please go ahead.
Thank you for the opportunity, sir. Can you please explain the unit economics of your vineyard tourism business in terms of construction and maintenance expenses and the revenue? And what sort of occupancy rate are you expecting for the first year of operations?
Hi, Tushar. We are expecting to build a 40-key property in phase 1 at our location. We expect our ARRs to be around 20 to 25,000 rupees per room night. So, in terms of occupancy rates, I think first maybe up to 3 years, it could be maybe around 40-odd%, but after 3 years, it will pick up to about 60 to 70% is our expectation.
Okay, sir. And so what will be the construction cost of this and the maintenance expenses?
It is hard for me to predict and tell you the maintenance expenses today, but in terms of construction cost, we are expecting to keep the entire project within 50 crores.
Okay, sir. And so you have 2 more projects going up ahead, increasing your active farmland and adding some vineyard space also. So what will be the capex for each of those projects?
We are expecting, in our capex outlay for next 2 years, all of it will get committed in this financial year, but some will get spent this year and some in the year after. But we expect to spend about 30-odd crores in capacity expansion and brand building. We are expecting to spend approximately 5-odd crores in expanding area under cultivation. I mentioned already about 45 to 50 crores in building the hospitality business. So these are some of the broad areas where we are committing our capex.
Okay, so I have one follow-up on the previous participant's question. You mentioned that you're increasing your capacity by 20 to 25%, your overall installed capacity. So what's the utilization right now?
Our utilization right now is disproportionately high. Normally in a wine business, about 80 to 85% capacity utilization is considered very healthy. We are actually operating at higher than that, which is not ideal. We are adding capacity so that we do not feel the capacity constraint that we are feeling today. This has actually held us back in growing our business, at least in the last 6 to 9 months.
Okay, so when do you expect the capacity addition to be commercialized?
By December 2024.
Okay.
The work is already underway.
Okay, sir. Okay.
Thank you. We have a text question from Darshil Zaveri from Crown Capital. What is the debt position of the company to fund new initiatives? Will company plan for some fundraising?
At this point of time, we have roughly 90 crores of debt in our balance sheet. About 15 crores is long-term debt and the balance is working capital. We may take an additional 10 to 15 crores of long-term debt going forward to complete all the capex that we have planned over this year and the next year.
Thank you. We have a we have a live question from the line of Shantanu Naik from HCMR India. Please go ahead.
Hi, sir. Thank you for opportunity. So I wanted to ask you about revenue share in your super premium plus luxury brands, which are placed about 1,200 rupees. So what would be the share?
So we're looking at roughly about 14 to 15% revenue contribution coming from these two segments.
Okay, so 14 to 15% from super premium and luxury, which are placed about 1,200, right?
Exactly. You got that absolutely right. So above the 1,200 rupee price segment, all the brands that we have put together, they are contributing roughly about 15% to our top line, and that number is going up every financial year as we're looking to premiumize.
Okay, and your value and premium segment would be how much?
So roughly our value contributes between 20 to 25%, looking at market-specific trends. That's been the trend roughly for the last 3 to 4 years. Premium as a category, roughly all put together, like I said, is contributing almost 75%. So like I said, if super premium and luxury is contributing about 15%, premium is contributing anything between 55 to 60%. And cans, on the other hand, contributes roughly 5%. So that's our product mix.
Okay, thank you. And your revenue share from D2C and HoReCa business, if you can put some color on it.
So I think we are very well poised in this area, and that's a split which for us for the last 3 financial years has been increasing in favor of HoReCa. So currently, as of last year, the split is roughly 75-25, with 75% coming from retail and 25% coming from HoReCa.
Okay, thank you very much. And my last question, and my next question would be, what would be the capex cost per 1 million ton, 1 million liters, sorry?
Our capex cost roughly per liter is what we try to calculate. So we range roughly between 55 to 60 rupees.
Okay, 55 to 60 rupees. And how much time would it take to add such capacities?
Roughly 6 months. I think we should be ready by December of this year.
Okay. And your plans on wine tourism business?
Join back the queue, please, as we have other
Sure.
waiting.
Yes, sure.
Thank you. We have a follow-up text question from Rachna Kukreja. The wine in a can segment seems to be a growing segment driven by its convenience and ease of use, but it currently makes a small contribution to overall sales. Are there any plans to increase the share of this segment? Additionally, how do the profit margins for wine in a can business compare to those wines of the value segment? How much comes from off-trade versus on-trade channels? How does the profitability... Yes, sir. Go ahead, please.
Yeah. So on the cans, currently, if you look at our business model, firstly, we're very, very happy with our can performance in quarter one of this year, as we recorded a 30% growth over Q1 of last year. So it was a record Q1 for us in terms of cans. And we see that momentum carrying on, throughout this financial year due to various tailwinds that we have. On a gross margin level, it is fairly consistent with our, bottles as well. Slightly better, you can say a couple of percentage points due to the lower packaging cost, which is there in cans. And as a segment, we are investing heavily both in terms of, increasing our overall distribution, in terms of sales and in terms of brand building. So it is a major point for our future growth. We believe the RTD segment is here to stay, and India is picking up from a lot of the global trends that we see.
Her questions are: how much comes from off-trade versus on-trade channels, and how does the profitability of off-trade sales compare to on-trade sales in terms of margins and revenue realization?
Is that question for cans or for bottles?
I'll read the entire question, sir. So she says, additionally, how do the profit margins for wine in a can business compare to those wines of the value segment? How much comes from off-trade versus on-trade channels?
So cans primarily is a retail-driven product. So retail contributes majority of the sales, I would say more than 90% of that segment. And we see this trend going forward as well. It was primarily launched for that reason as well. And this contribution, as we see, like I said already, will grow year on year. And on the gross margins, I already commented as well, saying that they're fairly similar to our bottle gross margins, maybe a few percentage points better.
We have a next text question from Yash Visharia from Dolat Capital. Can a lower ARR rate not be more feasible to get higher occupancies from year one itself?
I think this question is in relation to the wine tourism project that we have planned. Yes, of course, if one was to lower the ARR, occupancy rate could go up. These are some of the things which are dynamic in nature, and I think as we get the project started, we will be able to adjust to the prevailing condition at that time. We are not adverse to it, but we have a certain brand positioning in mind of the property and a particular experience that we wish to deliver to our customers. When we think it along those lines, for us, ARR of 25,000 seems achievable.
Thank you. Give me a moment, sir. Ladies and gentlemen, please stay connected. We have a text question from Ayesha Jain from Alchemy. What is your portfolio mix split between luxury, premium, economy split in FY24? Above what price point does the company classify as premium?
So, like I already mentioned, premium segment for us is 600 and above, up to 1200.
Okay. We also have a follow-up text question from Rachna. With our current market share at 30%, where do you see potential for further growth?
So in terms of market share expansion, that's something, that's been happening in both retail and in, the HoReCa categories for the last 3 to 4 years. We see that trend continuing as we look to innovate and, always launch new brands and, increase our penetration across the country as well. I wouldn't like to give a guidance so far on our market share number that we're looking, because our main area is to grow the category and to grow as a brand. So with that, of course, with those efforts, we have been gaining market share for the last 3-4 years, and I believe, we'll, keep looking to do so. And like I mentioned already, some of the key market share markets, we've held our position for some years now in them, and we're adding new markets in that list always. So our main effort is to grow, or to grow our profits sustainably.
Thank you. We have a text question from Naman Shah from Monarch Networth Capital. Are you availing the WIPS benefit in Maharashtra? And if you are, what is the amount received from WIPS NAD? What is the amount outstanding?
Yeah. Hello, myself Rajesh Gar. So yes, we are availing WIPS scheme in Maharashtra like other wineries are. And last year we received around 14 crores in FY24.
Thank you. I now hand over the conference call to the management team for closing comments. Over to you, sir.
Thank you, everyone who participated today and spared their valuable time to listen to our presentation and to the earnings call. We look forward to more interactions with you. Thank you again for your time. Be safe, be healthy. Thank you.
Thank you, sir. On behalf of Fratelli Vineyards Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.